Sir, what about Kriya Finance KDX? Yeah, let's take a look. So I have used it before and I was staking some stuff, but I haven't been following because user experience is okay on Kriya. So I had some of the airdrop. I thought it was okay. A lot of these stake to earn airdrops are okay. Sometimes I've kind of noticed you make like 10%. So I think there isn't much of an opportunity, but if you were gonna stake and hold liquidity and earn that way, not too bad. So you could earn right now 405% APY if you are, trading at the thinnest range for deep in Sui, uh, which is pretty good. But you want that full range, you want that lower risk, and realistically, you probably want to get as much unless the trading volume really picks up on Sui. And I think the trading volume has been down recently just because of all the uncertainty in the markets. Joepad, welcome. Glad you could make it. Joepad has been one of the biggest supporters of this channel. Always good to see him in the comments. Daniel, I'm just getting started on Sui and a total noob. Which DeFi platform would you recommend to start out on? All right, that's a good question. So it depends on what you want to do in DeFi. There's like two major things. It's either lending or trading. So, these are LP pools, liquidity provider pools. So think of it as an actual pool where you put two different funds in. You could put in deep and Sui, you could put in NB ETH and USDC, Sui and USDC. So these are the different pairs in that pool. And if people want to use that pool where, let's say they have some USDC and want to trade that from Sui, they're going to reach into the pool and trade for it. So these liquidity pools allow that to happen. And you can see these different fees that people are earning. So you can see that the trading fees for Sui USDC is 0.3%. We can see how much money people have provided into this pool and the current APY that they're making. Now this APY can change over time just because it depends on the trading volume. We don't know how much people are trading in the future, but over the past week or 24 hours, we can safely assume that it's been 20% in kind of the roughest of times. So by providing that, you do earn, but you do take on some risk. So let's say you were holding Sui and USDC. That's kind of how much you're going to get if the price stays the same, where Sui stays at its current price and USDC $1 obviously. But if Sui goes up or down, then you can take on some losses due to those changes. Now, it is a little better than holding any type of coin just because you have less volatility. So let's say you're holding Sui and it goes up 100%, you do well. It goes down 50%, you do bad. But if you're in a liquidity pool and Sui goes up by 100%, well, your pool of assets will only go up by, let's say, 50%. So you don't have as much to gain, but that's because it has to keep the amount that you have in the pool balanced, which means it's going to sell some of your Sui to add more USDC into that pool. Whereas if the price drops 50%, you would probably just take a 25% loss. So if you think that there isn't going to be too much volatility, that there is a lot of trading volume, then being an LP pool is better for you. So that is one way. Liquidity pools, I think, are great in boring markets. If we're in a bull market, you want to be holding. So we'll have to see if it actually turns into a bull market. But for myself, I like Suilend. There's a few different platforms on Sui. I know I'm shilling Suilend. There's no referral or anything. I just think the experience is very clean compared to something like Scallop. I know I'm going to Token 2049. Scallops, if I see them there, they're going to be like, "What the fuck, Dan?" What? But if you have a good user experience, I'm going to support that. Now, this is a lot. This might seem like a lot, so we're just going to hide some things. So rewards, account overview, and we'll just keep open deposited and wallet balances. So if we kind of just ignore everything on the right, it just makes it a little easier to focus. And maybe you can't see because they added some stuff, but we can scroll to the right a little bit and we can see the different earning rates. So we can sort by how much we want to earn if we want to do it that way, where you can see if you deposit any of these assets, you earn interest on it. If you borrow any of these assets, that's what you're going to pay in interest. So the strategy here would be, let's say you're bullish on Sui long term, you would deposit your Sui, you would get 3% in interest, you would get some of those rewards in SSui. So you can see if you look really closely, I know I can't, well actually I can zoom, let's see. So if you are going to hold Sui, it shows you what kind of interest you're going to earn. It's going to be in Send points and Sui actual interest in the Sui token and rewards in SSui. Now, there are a few different Sui products here. So we have Sui earning at 3%, but you could earn even more with Spring Sui, which is the same price as Sui. So it's already liquid staked Sui. You earn higher interest because they have more rewards for it. And then they have ecosystem LSTs. I know that's going to sound confusing, but these are also things like SSui. These are liquid staked Sui through different brands. So Spring Sui is one of the brands for Suilend and their ecosystem. K-Sui is from Kriya. I-Sui is through Ika. M-Sui, I'm not familiar with. FUD-Sui is through the meme coin. Trevin-Sui is through one of the creators. Up-Sui, I don't know what that one is. But yeah, they actually can make quite a bit of money providing interest and tokens to their users. So the interest rates are going to be different. You can see Trevin Sui, you're earning interest in lo-fi rewards, which is pretty neat. So that's why the interest is higher, but obviously that could be a little more volatile. We don't know what could happen. Otherwise, maybe you just want to have interest in actual Sui. So you do have quite a few options. It can seem overwhelming at first, but you just have to look at what assets do you want to earn interest on. So those get you your deposit APRs. What assets do you want to borrow? For me, I'm doing a little bit of leverage so you can earn more points. But basically, when you provide to this platform, you earn rewards. This is just my burner account, just so it makes it easy to show you everything, and we can test things out. But for me, I'm staking Sui and I'm borrowing Sui USDT to buy more Sui to earn with. So I'm kind of like leveraging myself at 1.2x. Nothing more than that because, you know, you don't want to get really liquidated. I'm not trying to take on too much risk. If the markets get bullish and everyone starts dumping money into the markets, I will borrow more money to buy more Sui from this platform to take on that upside potential. So it really depends on the market conditions. Right now, want to be a little conservative. Any news on silent hat lenders that you should know about? I don't know. I honestly don't know what that is. Oh, Suilend. Okay. Is there any news on Suilend holders that we should know about? I don't think so. I think, you know, the price has been terrible. But from what I heard that they're still building out an ecosystem, they're going to drive demand to it. Still very speculative. I'm holding some Suilend and it's been terrible since they claim that you could get the Suilend token for like 50 cents and now it's at like 36 or something. I don't know. But with Sui Basecamp coming up, I think a lot of the Sui ecosystem could pump. This is just obviously speculation. I don't know if it will. But when we have Sui Basecamp, they have a lot of big announcements. They have a lot of hype, and that's when the markets move. So that is something I'm looking at. And you know, if I'm at the event and I hear some crazy news, I'm probably going to set up some leverage longs to take on some of that hype, then take some profit. So that is the strategy I want to use. Can you explain the difference between staking, liquid staking, farming, and liquidity pools? Yeah, that is a good question, and we can do that. There's so many different terms in crypto, it's gonna sound confusing. So Suilend is a form of lending on Sui. okay, Suilend, and it's also a form of staking without any lockup times. So anytime you stake, you earn interest on something, and that's kind of how it works. So we're going to get into it in a second. So if we want to lend out our Sui and earn interest on it, we're earning, let's say, 4.6% if we're using SUI. That is a liquid stake Sui. There are a little more incentives because it is through a platform on Sui. Now, when you have liquid staked tokens that represent a token, that can be risky. They can, depeg, and that's very risky on other ecosystems. You have ETH, you have wrapped ETH, you have EtherFi ETH, that's EETH. You have a lot of different variations of Ethereum. Now, if any of them get hacked or the pricing depegs, you're not going to have one-to-one plus whatever you staked in interest. So that can be dangerous. Now, Sui does implement something different with their liquid staking Sui products, and that makes sure that it always stays pegged and you do have that interest. So liquid staking on Sui is a little bit better. I know I can't articulate it as well because when they talked about it, I was like, yeah, that's great. But it was also kind of boring, so I kind of glossed over it. But I was like, all right, so essentially it broke down to it's a safer version of liquid staking. So SUI can always be redeemed for Sui at the highest rate possible on Suilend. So liquid staking just means that you are staked and you're liquid. So that means your tokens are not locked up. Now with liquid staking, you get a token that represents your staked coin. So in the sense that we want to stake Sui and earn interest for it, we can just hold SUI, and that represents that we have staked Sui, and that's the SUI token. So when we hold SUI, we're holding staked Sui, and this is through Spring, another platform that doesn't necessarily mean stake Sui. If we are going to stake the Sui coin, you can do that directly in the wallet. So we're going to go into the wallet, we're going to go to earn, and we want to go into staking. Start native staking on Sui. Lock assets on Sui while you earn. Now the thing about staking natively on a blockchain is you don't start earning immediately, you start earning after every epoch, which I think is like 1 or 2 days on Sui, and then you have to unlock those tokens too, and if you unlock too early, you won't get the interest for the day. But essentially, liquid staking solves that. Liquid staking makes sure you earn all the time, it gives you these pool of assets, and it is a lot more flexible. So let's say we want to start native staking our Sui on the Sui blockchain. You can see all the different validators. We're looking for the highest interest we can get, and that is 2.9% with Mistin Labs, where it can be much lower with some of the other validators because they're taking a cut. So you're not going to get your full value there. But the most you can get for staking directly onto the Sui blockchain is 2.94% through the Mistin 1 validator. Mistin 2 is a little lower, so I think it depends on how much value is locked there. Whereas if you just lend Sui to Suilend, you get the interest 1.46%, and we kind of saw that was the rate, but you also get rewards in SUI. So that's the thing though. Even though you are getting more interest through using liquid staking, you do take on more risk. So let's say they get hacked, the interface is overtaken by a hacker, and it just connects your wallet to the hacker every time you go to the website, then they drain your funds. Not necessarily possible with Sui. You can only transfer your funds, so whenever you confirm a transaction, it's going to show what's happening there, and you want to make sure all the trades are on the up and up. Now, when you make a transaction on Sui, it's actually really clear of what's happening, so you want to read that if possible. But again, staking on the blockchain is always going to be much safer than having to stake through a website, through using a liquid staking protocol. You take on a little more risk for a little more reward. So it's up to you. I don't have a lot to lose, so I'm going for maximum earnings, and I'm using Spring Sui, I'm going for the highest APRs that are safely available on the platform. So that is the difference between staking and liquid staking. Any native staking to a blockchain, Sui, Ethereum, Polygon, pretty much any platform, if you are staking directly with a validator, 100% safe. Or the safest you can get. That's the safest you can get on a platform. If you're doing liquid staking, you take on a little more risk because now you're relying on a third party to manage those assets to make things happen, and that can't really happen, fully autonomously. There is some management there. And then let's see, we have farming. All right, so farming is another way for you to earn interest. That's just basically you adding liquidity to a pool and getting rewards for it. So we're gonna look up some yield farms on Berachain just because the founder Smokey actually mentioned that there were some high interest rates that people were farming. So farming just means you're earning yield, and that is essentially what we were doing on Kriya Finance. So let's take a look at that example. All right, so infrared finance, essentially you can call these farms, and when you're farming, you're providing liquidity to a platform. Now, it does get dangerous. I have been burned so many times on these high yield farms that I don't even care to look at them just because they can dump so quickly. They can have these weird lockups where you just lose money and you want to look into it and dive in a little bit before you make any serious investment. So here on infrared, we can see that the highest interest rate is through the BixBT and wrapped Bera pair. You're getting 984% APR, and most of that is definitely going to come through some other token. So let's see. You're going to stake and you're going to get rewards in another token. So that's essentially how farms work. So you put in BixBT, I don't know what that is, and Bera, wrapped Bera. So that is the wrapped version of their native asset. And you put in those two assets, you're going to get the IBGT token. So this is a way of farming, and it could be low risk just because if you believe in those two assets and you facilitate trading by putting in this liquidity pool, you would earn interest in this other token, IBGT. Now, the reason why these farms start up is just because they want to kickstart liquidity, they want people to trade there, they want people to earn there, so that helps kickstart the IBGT token. So that's kind of how these farms work. You earn high interest and you get another token as a reward, but you also take on the risk if you are, let's say, the IBGT Bera token. If you're in a pair like that, that sounds dangerous. I would not be in that just because you're printing so much of this token. There's going to be so much sell pressure, and then your liquidity pool balance just continues to go to zero. So farming is a little bit dangerous if you don't have a lot of experience. And yeah, I wouldn't chase too many high yields unless you are comfortable with the assets that are there. So let's say Ohm Honey. I'm not familiar with both of these actually, so I don't know if those rewards are worth it. Then you have other things like this, where you have compounding vaults, love handle. Actually, the rates aren't too high. So farming is essentially liquidity pools where you are putting liquidity to farm a token. So they're all kind of very similar, but also slightly different. And I think that covers DeFi. I think we just covered all of DeFi. I'll probably cut that up into a video because, like, yeah, I think that was pretty good. Feel free to engage with the video because that always helps. With that, I hope you got your full value for today in stream.